Consumer sector trying to bottom. Hi, everyone. I'm Maggie Lake, and today I'm talking markets with Mish Schneider, Chief Strategist at marketgauge.com. Hi, Mish.
Hey, Maggie, how are you?
I'm doing okay. I'm doing okay. It seems like we are in a bit of a holding pattern today with stocks and bonds, fairly range bound. I think people are waiting, right? We have big earnings throughout this week, economic data, an election in Canada, blackouts in Europe. I mean, you name it. There's a lot to watch, but it feels like people are waiting for maybe some clarity on tariffs. Um, hard to time when that's coming, but I know you're watching some really important levels on a bunch of different charts. So I wanted to jump in because I know you've been tweeting about and writing about the gold-silver ratio a lot. And this is really in your wheelhouse. So tell me why that's important and why you're watching that.
Well, first of all, with all of the headlines you just mentioned, one can go nuts just trying to wait for a signal and then possibly jumping in too soon or too late. So what I've been doing, since I've been doing this for such a long time, is I have really a few set of key indicators. Gold, silver hasn't really come up in a while, so I'll get around to why. But, typically it's been my economic modern family, which was very clear this year, the title of this being the consumer. The consumer sector was the first to start rolling over and down in January, even before all of the tariffs happened. So that's important in my family, number one. Number two is I like to look at the risk gauges against the bonds and looking at the dollar, my trifecta of inflation. And that's where we come to the gold to silver, because we're definitely in a stagflation environment. However, does that really matter in terms of trying to make investments? So what's interesting is the gold-silver ratio. When I went back and looked at it in 2022, it was like a perfect mirror. So that's what got me going with gold-silver 2022, what happened thereafter, gold-silver 2025, what happened thereafter. So what you've got here, right, is this is the 2022 chart that you just put up.
Mm-hmm.
Yeah, so I've got to put my glasses on. Yes, we're at that age now. So if you look at the gold to silver ratio from 2022 and you move your eye to close to September, October, I actually wrote it there. It peaked at 95.42 back then. So, the reason why this is so important is because gold is not rallying as an inflation hedge. Gold is rallying as a safety play in uncertain times. Silver has been dragged along, but as we know, it's been well underperforming. So if we really want to understand one of two things, whether gold will stop exceeding the velocity of rise versus silver because things are better economically, or whether inflation is picking up, or, in the things are better, silver being somewhat industrial, that would help it too. So that's kind of why that's so important. And I hadn't really focused on it until I saw that peak a couple of weeks ago and now the peak again. So when I looked at that peak in 2022, what was happening in 2022? The biggest headline of 2022 was the Fed. They were raising at an aggressive speed. The rate of change was blinding for investors, and the market was crashing. And then so people rushed to gold, kind of same thing, thinking we were going into a recession. That's it. Market's over. Economy's over. And then we had that peak. So when I looked at that peak, I looked, what else was happening at that time? So before we even knew it, because the Fed didn't say anything yet, they were no longer going to raise the rates. That's when they started their stay put for a while. Number two is the TLTs, which had been getting crunched as well with the rate raises, started to bottom. Silver started to bottom. And so did the SPY, although it had choppiness until the spring of 2023. Should I just keep going? I mean, sometimes I feel like I'm
yes, because I feel like this is the narrative, and I'm like, and
I know. Permission to continue. Yes.
Permission granted.
So in 2025, fast forwarding, we had the Fed last year lower the rates 4 times, but really basically the headline has been on pause since we've started with this administration, which makes sense at this point for the Fed to do. So the TLTs were again crashing. Instead of the market going down and the TLTs going up, we saw For whatever the reason is, a lot of selling in the TLT. The gold has been skyrocketing because of all the uncertainty in the flight to safety. Silver was sort of being dragged along, but again, not necessarily showing inflation or recession uncertainty. So then when we saw, and this is from Friday last week, that peak up to 105, 106, and then the next day it got lower, I was like, wow, this looks like 2022. Let me look. So what are we seeing now? Silver is trying to rally. Gold is sort of leveled off. I wouldn't say it's going to stop going down. It's going up or down. It's just, it just needs to level off versus silver. The bonds today made a nice move. They look like they're bottoming. And the question on whether or not the SPY has bottomed, we could see chop for, I don't know if I would say till next spring because we're in April as opposed to October, but maybe until the summer months till we find out for sure whether all of this really basically is the worst is behind us.
So we're kind of on that same setup. That sounds, I don't want to say optimistic because choppy is not necessarily, oh, this is great relief, but it doesn't sound like the floor is going to open up here. It doesn't sound like we're in this kind of cascading treasuries, dollar, and stocks all selling off, which is kind of where we were a week or two ago.
Yeah. And we were free falling and it was very scary to people. But a couple of things, at this point have happened to be less scary. One is that we don't know the truth from fact, from fiction on what's happening with tariff talks. But we do know that there's a certain desensitizing that happens with investors. Unless something really dramatic happens, people go, all right, tariff news, whatever. We already can see that prices are going up in certain sites, particularly goods coming from China. And we know the consumer has backed down. So even though we're talking about SPY, back to our original topic of this conversation is consumer, it held a very key area that would have been a recessionary indicator if it broke down under the 80 monthly, which was around 64 in XRT. Instead, it's holding. So, that's how you have to be so delicate right here. Stagflation can last, and from there, it can go to recession or it can go into growth. This is what happened in 1980. We were stagflation, then we went recession, and then we went into a period of economic growth, only things move a lot faster now. So that's why, yes, this does seem like we're at a desensitization. The dollar seems to be holding at least around that 98, 99 level. The TLTs are going back up and yields are falling, not because of Fed policy, but because the fear that everybody's going to be selling our debt is dissipating. And the SPY still has some hurdles to go, and the consumer even has more hurdles because it's underperforming. But as long as things stay kind of like where they are, that's when you can start to look for opportunity and feel better.
That's so interesting. So are you surprised to see the consumer sector holding up well? And again, this is part of your modern family and, such a digestible way for us to all kind of wrap our head around the different parts of the economy. But it seems like there would be so much pain associated with the tariffs. And yes, I know we're desensitized, but you can make the argument we haven't really felt it yet, right? We're all in this kind of like, oh, it's going to be terrible. And then you kind of order stuff and you're like, oh, okay, it's still there. There are no shortages. And it doesn't seem like it's outrageously more expensive. I mean, on the margin, you're starting to see stuff, but that's because people built inventories, right? So, how sort of resilient does the consumer sector seem? If it's holding, is it a fragile existence right now, that consumer sector? Or does it feel like, yeah, no, maybe the consumer's in better shape than we thought?
Both. I mean, this is the most nuanced market and has been now for quite some time. It's so hard to say, sink your teeth into this because this is the biblical thing to say about the market. And the consumer is certainly all over the place. I mean, certain things that we can see. We do know that certain areas of inflation have come down. And by the way, PCE comes out this week. That'll be interesting. We do know that in some ways, the consumer has already decided what they want to spend money on and what they don't. So we felt that impact. Airlines, of course, have been one that's really gotten hit really hard. Housing is starting to get hit harder. certain things of inflation is still really high, like insurance. But if you're looking at just strictly at my trifecta, the whole area of food is not necessarily really that bad yet, right? So the consumer, as long as they can, and gas prices are lower, right? So as long as they feel like they're filling their tanks cheaper and putting food on the table isn't so bad, they're not in an area of despair at this point. So that's the good side. And of course, the vanity, people are still spending money on health and beauty. And that's exactly what you expect people to do during tough times. On the flip side, though, the fragility of it all is that, yes, it's holding, but by the skin of its teeth. I mean, we're talking 64 in XRT. It closed today at 68 something, not that far away. So what could destroy the consumer again? Obviously, more tariff wars, and you go online or you go to the supermarket. I went to CVS. There was like 4 or 5 aisles with nothing on the shelves. I've never seen that before except COVID, right? So what would happen? Supply chain fears, people, basically stop even going to eat out. Restaurants are still packed. I think that that the consumer is nervous but not terrified right now. And yet you got to watch that. Scale could tip either way until we see certain levels. Under 64, like I said, I would be really nervous. If we can get to over 70, 72, where the moving averages start coming in, then I'd be like, okay, you know what? This is a market with a short memory.
So I want to flip back to gold and silver because we've had so many questions about this. And hey, everybody in the chat. And I see a question about uranium already. We're going to get to that a little bit later. But a lot of people have been looking at gold, that big move, and saying, how do I approach this? Did I miss it? Should I wait for a pullback if I want to increase my exposure? Would I be better off looking at silver instead because it's lagging? How are you thinking about gold and silver here?
Well, I've been a gold bull for how many years now? One of the few. Me and Peter Schiff.
If we had all only listened. Maybe some did in the chat. I bet some did. But yes, you have been making this point for many years about.
Right. Well, because, and that's why it's dangerous to feel anything politically about what's going on, because I started talking about gold because you could see the rising debt. You could see the government spending. You could see the potential for credit crises. You could see foreign countries starting to sell dollars and talking about other ways to use for reserve currency. And by the way, Bitcoin is something we should mention briefly too.
We will.
So now here's how I would answer the gold question. I love 3,400. I was, sorry that it got to 3,500. We've taken some profit. We still have a position because we don't get out until, we have a tail and we have a trailing stop. But if somebody came to me now and said, should I buy gold? Based on everything we just talked about, I'd say, well, if things sort of come to a relative calm, probably not. But that's where the gold to silver ratio comes in. Silver, holding it around $32 an ounce, if it gets through $34 an ounce, it's hard to predict where it can go. It could go to 40, it could go to 50, it could go to 55. It really depends on what happens, but that's irrelevant at this point. What's more relevant to me right now is when I talked to Kitco a month ago, I said, don't do anything because I wasn't sure. But over the last couple of weeks, it's been obvious now that silver is a really good buy because you really know where you're wrong.
Let's jump into Bitcoin now. I'm sorry, I hesitate as I'm reading all of these questions, and you're right to roll up and be able to ask Mish about it. Jim K asking, since we're on gold, silver, and things that may be safe havens, ask Mish what she thinks about Bitcoin starting to be less correlated with NASDAQ ? Or might it fall apart if we retest the lows?
Well, I think starting the early April, when I noticed that Bitcoin was holding at around 76 to 78,000, while it was obvious that the sell-off in the markets was starting to accelerate, that's when I started thinking, we've talked about, right, Bitcoin's part of my family, tween, wasn't sure what it wants to be when it grows up. Maybe it's starting to figure it out. I mean, that's why I like to talk in terms of family, because it makes sense to me. And so Yeah, we bought Bitcoin in our quant, but I bought IBIT, which is a very good pure play to Bitcoin without the scariness of the volatility. And I'm still sitting with it because 95,000 was a good target, but today went what, to 92? If it can get through 95, it'll go to 100. It's possible it can go to 125. It's possible it can go higher. If we really have decoupled, there'd be good reasons why. Fear of fiat currency, more level of uncertainty and trusting even any government for that matter, a way to price things in something that's not manipulated by the government, you know, the whole beauty of Bitcoin and why it was created as a decentralized store of value that's limited in its supply is kind of cool. And now I think people are waking up to it.
Yeah. For folks who have been thinking about down this line too, I just want to recommend, I had a conversation with Jeff Dorman. If you missed it, it's here and the write-ups on Substack. He's in that space, was a traditional finance guy for many, many years, and did allocation, including at Citadel. And he completely moved over to digital, I think about 10 years ago. Super knowledgeable. We had a great conversation breaking it down for people who are at the beginning of that learning journey, including like not being able to call things crypto. Like crypto is just a wrapper. It's really, really helpful, I think, to just sometimes dig in and hear about even the vocabulary we use around that. So I highly recommend having a look at that if you get a chance. So bullish on Bitcoin. Okay, let's get to that uranium question, because as usual, Mish is awesome and gives us the trades or her picks for the moment. So IBIT is one of them, which you just mentioned. What about uranium? I'm going to try to find who asked that question. But in the meantime, while I look for it, how are you feeling about that? Because that's also on your list, if I'm not mistaken.
Well, you know, we've talked about uranium because your audience loves to hear about uranium. And I've been very honest, as I always am, in that anytime I've ever bought uranium on strength, I've lost money. I mean, that's just, I actually kind of stopped even thinking about it, URA. And then 3 weeks ago, when the market bottomed by that sort of that April 9th low area, I started looking around the board of what I thought held interesting support levels and what had what I call a classic reversal bottom, which means it makes a new 60 plus day low. The next day on very big volume, just like it did on the new low day, it actually closes above the high of the day before or has an inside day and then closes above the next day. That's my classic, what we call glass bottom. And so uranium did it. So that got me, you know, I scanned. And so I'm like, uranium, okay, wow, that's interesting. And then I started thinking about all the stories I've heard about clean energy and all these big companies like Microsoft looking to maybe start up with nuclear energy in terms of being able to deal with all of the demands of AI. And I thought, you know what? I've always bought strength. Why don't I try buying some weakness for a change? At least I know where I'm wrong. And I did. And my God, it's been like one of the most painless. It's thank you, uranium, for paying me back for all the pain. It's painless. So right now, where are we at right now? I mean, that's my little story, which I like to tell because, you know, that's the mind of a trader. But from a technical standpoint right now, it's cleared the 50-day moving average. So it's back in a recuperation phase, which means it's now back over the 50-day, but still under the 200. Does it have resistance? Of course. But the point is that now I'm starting to see more stories again about the demands of AI, this administration actually looking into that after being a drill baby drill type of situation, which I didn't believe anyway, because I just knew that regardless, there are younger people working with President Trump who are more in support of electric vehicles and clean energy and particularly nuclear energy. And so now, of course, we have Iran, and that's another potential bullish thing for uranium if things get going there with Israel and the United States. So there you go. There's my uranium. If you were going to just first get into now, I probably would not want to see it break down under like 2350. I like to play it real tight in this environment. And then, you know, it's trade. I think it got up to close to 25 today, so that would not be that bad a risk. And do I think it can get closer to 30 and maybe higher? Maybe I picked the bottom. We don't know that yet.
Yeah. By the way, I mentioned really briefly that there was this blackout, and there's some great, tweets about that. So we talk about AI demand, but we can't forget about just the, disruptions and energy demand, and somebody making the point that Spain and Texas are both, electricity deserts, and, just some of the vulnerability that can happen whether you're dealing with extreme weather or heat or any of that. So there's a lot of conversations that are going to be happening about energy, and I just think with so much emphasis on trade, it's taken a little bit of a back seat. But we have to keep our eyes firmly on that for sure.
I wanted something I didn't put in my notes, but I noticed today, and I know your audience is interested in this, is I looked at a chart of natural gas, which I basically have not even thought about for a long time.
Mm-hmm.
But it did exactly what I just said in the futures chart. It made a new low last week. It had an inside day on Friday, and today it opened up higher and closed right under the 200-day moving average. I think if I'm looking at the May or June contract, I forget which. So, of course, relating this to UNG, that also came back through the 200-day moving average today. So, there's a little bit of a situation there with UNG versus the futures. So that's why you always consult. But I thought, wow, this is interesting. What if natural gas has now actually bottomed? So watch that 335. That could be a very low risk trade as well. And another big demand in AI is natural gas to, fuel these centers. So I thought that was kind of a...
I love hearing the way you talk about this, Mish, because I think that this is what experience allows you to do, because you're watching so many charts and so many prices. And I once commented to somebody else who's really experienced, it's almost like you're reading music or song sheets, because you see something that like catches your eye that's not usual. And it's always a really good sort of early tip off of an area to watch, even if it's something the rest of us had taken our eyes off of. So thank you for that, because gosh, there were times we were talking about nat gas every day, and you're right. There's just so much in the headlines that it's easy to forget about some of these areas and spaces, but this is exactly when you need to be looking at them. And some of the people talking about are mentioning some of the gains today. URA up 2.5, UNG up over 5% today. Thank you for that, Paul. Ken asking, do you like LNG?
I looked at that chart today too, by the way, because it's, natural association. If you like natural gas, look at LNG, right? And the chart looks really constructive. It hasn't broken out of a top level of consolidation. Maybe it did by the end of the day, but when I looked about an hour before the close, it looked like there was a lot of resistance right at the current levels. If it gets through there, that's been consolidating in kind of a range for a while. That would certainly be an interesting play. Educationally speaking, of course.
Yes. That's right. This is not financial advice. This is just
right, exactly.
Kind enough to share her thoughts on. There's another one that you're watching, but very seriously, this is how you do it, right? If you are trying to trade, if you are trying to follow names, if you're trying to create a framework for yourself, this is why Mish goes through her process, because it's the type of thing you should be doing, because she's got a narrative that she's watching, but she also has levels that she's watching. It has to be all of that. You've got a name on here I'm not familiar with at all. Sunrun? Is that right? Sunrun?
Yeah.
And that's sort of energy related too, right?
That is energy related. And this is another one. I don't think I've looked at Sunrun, I don't know, maybe years. And so it caught my eye because it did the exact same thing I'm just talking about. Made a new low, consolidated, and I got in Friday when it took out the 50-day moving average. So just a little tip in terms of trading these sort of setups. I'm the classic bottom finder. I mean, I'm really good at that, right? I'm not really good at momentum trading. I'm the first one to admit it. When something is flying and people say to me, would you buy it here? I get a little bit deer in the headlights because I don't know where my risk is. When something has a good story and is bottoming and a really good risk, I'm all about it, right? That's been my success.
Mm-hmm.
And that's where I got into gold. I mean, long before anybody was talking about it, because I loved the charts, right? So that's where Sunrun came in, and it has the story. And I know now if it fails the day that it broke down under the 50, that low of that day, it's a failure. Get out forget it. I mean, this is how you have to trade right now. This is a new market. And I want to make sure I say my piece on technology, because in the mainstream media, all anybody ever asks me is about tech, right? And so I was really proud when I went on CNBC a couple of months ago, and they said, would you buy the Mag 7 here? And I went, no. I mean, I literally, like, it blurted out of my mouth that the anchor started laughing. And so the reason why I want to talk about it for a second is because everybody keeps talking about the generational opportunities. And that may or may not be true, but we don't really know that yet. It actually has cycled to its top in July. It's come off. It's in a bear phase in terms of if you're looking at SMH or the whole tech sector. It's getting these rallies that are short-lived. Be careful there. To me, the generational opportunities are what we're talking about. Things that might be in the clean energy space, the silver market, and then a few other choice things. The EV market. I mean, Tesla had a phenomenal run. I'm learning all about Rivian. You know how long I've sat with Rivian? This is one I've been stubborn about. Because if it breaks 10, I'm gone. Well, today it actually got over 13. I'm like, yay, Rivian, right? So, have a vision of what really is generational, not something that already exploded. And now you're trying to catch a falling knife, and you get all excited if there's a bounce, and all you hear is people on the media going, yes, NVIDIA, just keep buying the dip, just keep buying the dip. I'm not saying NVIDIA isn't a great company, but today news or over the weekend about China and the competition there. So it's like.
There are risks.
Yeah, there is. Go ahead, Meg.
I always remember something that we talked about in an event we did together. You had a great chart, and I'm going to probably butcher the summary of it, but you talked about, when you talk about generational opportunity, you can also talk about generational pain, and you had a great chart about what happens if you suffer a really big drawdown, how long it takes to build that up. And I know you don't kind of believe in just sitting, riding things down, because it takes so long to recoup that. So I feel like that's like sort of underneath some of what you're saying about technology too. If you lose all of that, it's hard to gain it back.
Well, you're absolutely right. We did talk about that, because there have been periods in history in the United States, and certainly if you look at Japan, where the market didn't do anything for 15 years. From 1968 to 1982, the market went sideways. So if you bought into that while it went down, which it did, and you waited 15 years and then first started making your money back, well, if you're 25, maybe that might be so bad. Although I think most 25-year-olds don't want to sit through a 50% decline and have to wait 15 years. And if you're 65, that's really bad. Yeah. So that's what we talked about. And Japan sat sideways for years and years and years. So yeah, I think that it gets me really upset when I think people talk their book. At least I admit I'm long uranium. Okay, fine. I admit it because I'm here to help you. I'm not here to talk my book. I will tell you immediately if I'm wrong. But there are not everybody has you investor best interests in mind.
Yeah.
And that's what keeps me in this business, really. I mean, besides the trading, I can do that privately, but I love communicating that to people. Need help right now because they're told, oh, you're down 40%. Just wait. The market always comes back. Stagflation, it may not come back.
Yeah.
It may take to 2028.
It does feel like, we really have to be a lot more proactive about that. Want to sneak in two more things. And I'm going to keep with the theme of things people forgot about and left for dead. One of your other picks is around cannabis. There was a time when we got asked that every single day, or I did, and people were so into it. It was kind of what they were. And boy, I haven't had a question on that in probably over a year, which maybe is an indicator itself. So you're looking at cannabis again?
I'm long MSOS. I got long that too last week at 240, just so people know where I'm at, because I don't want to lose money in this. But so one of the things you mentioned was Bitcoin. I want to say that I'm doing a radio station here in Santa Fe. It's public radio, KSFR-FM, but it can be listened to anywhere. And I did a show last time on Bitcoin. So if you wanted to find that, it's Bitcoin 101, by the way.
Oh,
I
great.
work.
We'll try to find it and put a link in the description.
Okay, and now we just did our first segment on cannabis, and we're going to do our second segment on cannabis. I'm actually going into studio this week. So essentially, to answer your question, I live in a state where it's legal recreationally and medically. And I talk to people that are state regulators and people who are cannabis store owners. I've always known it's a matter of not if, but when. It will be rescheduled. It will go, the SAFER Act will pass. Never in all the years that I can remember, except for maybe years ago, have I seen so many headlines about the pressure being put on by legislature, bipartisan legislature within the Trump administration. States like Montana, all of a sudden you've got these very conservative states at least examining medical cannabis, and they also know that if they pass these rescheduling and SAFER Acts, more federal money will go into the research for medical cannabis. The numbers are there. But
the problem is the national banking law, right? It's actually a federal issue. It's not a state issue.
Law. Yeah, that's the SAFER law. But there's pressure now. There's pressure. And Trump himself has said, I'm for at least the legalization of medical cannabis because I think it could be helpful. So as I said, I haven't heard this much buzz about it. Buzz, yes.
But fine, maybe intended, maybe not intended. It's so funny because and this is the sort of PTSD that people are going to have to overcome from an investment point of view, because Jim said cannabis, talk about loving to lose money. And yes, it a lot of people were disappointed from their investments in that. So it's going to take a while.
But Jim, and now it's trading at 260. How much money are you going to lose? Well, I mean, you have the opportunity now. Think of it like a lottery ticket. That's how I'm looking at it. It's a lottery ticket. Worst case, if it breaks down under 2, okay, I lost 40, 50, 60 cents, position size accordingly. But if something happened, that thing will go from 250 to 5 overnight and then keep going because everybody will go, oh, crap, I've forgotten about this space.
Amazing. One last quick one will sneak in. And again, apologies for who asked it because we have so many messages. It fell down. I can't find it. But anything international on your radar? There usually is. I mean, I know you're a longtime Vietnam person. Any thoughts now, or are you?
Yeah, Vietnam. It needs 2 closes over 12. Don't touch it right now, because it is definitely in the crosshairs of tariffs. And even though they've been trying to make deals with the United States in terms of tariffs, China puts a lot of goods through Vietnam to avoid tariffs, which means that the administration here could be tougher on it and a deal may not be made that will help the country. So I'm just looking at the charts. I got a little hurt on that major crash, but I felt like maybe it was a little overplayed. 1140 was like, the entry, my original entry, right? But now I'm looking at it. I've chiseled down the position, and 12 in the charts, to me, and I would have to have a couple of closes over 12, and I'm talking VNM, to get me interested. China over 35 FXI gets me interested. I'm sorry I missed DAX. I saw that and I never did it. And again, keep your eyes on countries that mine if we start to see copper and silver go up. So South Africa would probably be one of the most classic places to look for that sort of thing. Maybe even Central America because of Chile, South America, those countries, things that actually have raw materials that are energy related.
Great stuff. Mish, it always amazes me how much you watch and how you can keep all of this in your head. I say it every time, but it is absolutely extraordinary. And we'll try to find that link and put it in, of course. Mish, it's always so great to catch up with you. Thank you so much.
Oh, thank you, Maggie. It was so great to be with you. And I love your audience. Thank you.
They're so smart. They're so great.
Yeah, great questions.
And I just want to also remind folks who are newer to listening to Mish that she said it, she weaves it in all the time, but this is also not only about understanding your own risk, but making sure that you size your position accurately. And Mish is always using all the tools and experience she has to make sure that she is hedging or using options to make sure she limits her risk on the downside, and she's nimble about getting out if it moves outside of our framework. So just make sure that you're doing all of that too. This is not just like go buy this stock and then go on vacation and forget about it, right? There are always, there's all this other work that needs to go into what
that was so 2023.
exactly. Oh, all that pesky work. Yeah. No, seriously, Mish, thanks so much for sharing your wisdom as always. And thanks everybody. Beginning of a week. Let's make it a profitable one. Thanks. We'll be back with you Wednesday with Tommy Thornton. So join us then. In the meantime, take care and good luck out there.